Welcome to LiberTex. In this video, we'll present the top 10 trading strategies for beginners, giving you the most essential information to accelerate your trading and dominate the markets. Whether you're interested in trading stocks, forex, metals, or crypto, the strategies and tips covered in this video will help you reach your goals to take advantage of both bull and bear markets, so you can have wins on both green and red days. So get your notepad ready and get excited to dominate with your trading in 2021. And if you haven't already, make sure to subscribe to our channel to get continuous updates on breakout stocks, market updates, and opportunities to help you hit consistent home run after home run. Let's get started. The first essential trading tip is to always do your own due diligence and research. While it's possible to trade successfully on rumors and word of mouth, without proper research, it is incredibly risky in the long run. When you're looking at a forex pair, cryptocurrency, gold, or oil, for example, there are several pieces of information you'll want to take into consideration. Every asset has its own specifics. Currencies react to actions by central banks, while cryptocurrencies are known to be extremely volatile. Gold and oil, on the other hand, are sensitive to global political events and conflicts. Research in advance what impacts the instrument you want to trade to increase your knowledge, leverage expectations, and limit potential losing trades. The second essential trading tip is to set aside funds and maintain a level of buying power, also referred to as dry powder, in your trading account to seize opportunities when they present themselves. If all of your capital is tied up in assets, without maintaining a consistent and predetermined amount of buying power on the side, you'll have to sell assets to fund new trades. This is not ideal, especially if your current trades are performing well and are long-term holds. Therefore, whenever you get paid from your job or on a certain date each month, make sure to pay yourself first by setting aside money reserved for trading to realize growth in the long term and be ready to pounce on emerging market events. That brings us to our third tip, which is to start small. Don't invest any money that you are not comfortable potentially losing. This will minimize your risk in the long term and prevent you from experiencing any major loss that would make recovery painful. Keep in mind that just because a share or asset is trading at a certain price, it does not mean that you can't invest or trade it. With LiberTex, you can trade with fractional shares, meaning you can buy a specific dollar amount of a stock, even if it's below the price of a full share. For example, if one share of Tesla is trading at $800, but you only have $100 to invest, you can still buy $100 worth of Tesla and have this money move with the stock. Fractional shares are a great way to get started with investing in big companies and build out positions over time. Our fourth trading tip is to never FOMO. FOMO is the fear of missing out. Oftentimes when a stock, cryptocurrency, or any other asset experiences a major spike or rally, traders will see this and want to go all in. More often than not, this leads to painful losses. When there is a big rally, there is usually a big correction afterwards, and by the time you get in, you can be too late. This therefore results in buying at the top, only for the asset to start its decline back down. This reiterates why it's so important to do your own research so that you can establish your positions before an event happens, so that you can enjoy the rally having gotten your positions established well ahead of time. This leads us to our fifth trading tip, which is to have a clear understanding of which plays are long-term and which are short-term. If you are in an asset for the long term, then price fluctuations and swings should not concern you so much. You know you only experience a loss when you decide to sell when the asset is down, so you can simply hold, knowing that your research and conviction about the asset is for the long term. However, if you enter into the trade for the short term, make sure you have a price target. Trading in the short term is more risky as you have less time to rebound if prices decline. It's therefore important to not get greedy and to take profits when your price target has been hit or if you are comfortable with the gains the asset has made in a given period. Our sixth trading tip is to review your previous trades and learn from them. Keep a record of the date and entry price at which you opened the trade and the reason why you opened it. This way, you'll be able to reflect on good and bad decisions you made in the past and identify those variables that help you make better decisions. Our seventh tip is to know your plays by keeping a close eye on your watch list. Monitor the assets you have positions in or are interested in taking positions with. Observe how they tend to move on a daily, weekly, and monthly basis so that you can identify potential opportunities and anomalies. For example, If a stock usually trades between $20 and $25, and you see it trading at $17 without any news to have caused the drop, this could be an indicator of a great place to build out your position and get established for its return back to the $20 range where it usually sits. Our 8th tip is to minimize risk by setting stop losses for your more risky or short-term trades. A stop loss comes into effect when a stop drops to your specified area to get out. For example, if you don't want to lose more than 20% of your initial investment, a stop loss will sell your position automatically if the price goes to 20% or below. Of course, you determine the percentage or price where you'd like to get out in advance so that if the stock takes a massive dive, you won't have to suffer the full scale of the loss. Our 9th tip is to not get caught holding the bag. This is a term used by traders to describe the event when a stock runs up and then starts to come back down and you are still holding the stock because you didn't sell or got greedy. Stick to your original plan and take profits when you've reached your goal. You can always re-enter a play. There's never anything wrong with securing profit. Our 10th and final tip for beginners is to stay calm when trading. The markets can go through periods of intense volatility, and it's important to remember that there will always be more opportunities in the market, and that it's impossible to get into all of them at once. Don't make decisions in the heat of the moment, and instead, practice making rational, level-headed, and well-researched decisions without emotional bias, and you will see greater success in the long term. We'd love to hear how you're doing in the markets and whether you've made any mistakes in your trading journey. Share your stories and experiences with us in the comments below and join the conversation with our analysts. If you're looking for the best brokerage to get started with trading stocks, cryptocurrency, forex, metals, and more, we'd love it if you'd check out our award-winning platform at libertex.com. We offer the most competitive rates, fast fulfillments, and secure processing. It only takes seconds to register, and you can start trading without depositing any money. If you enjoyed these tips, we'd appreciate it if you could like this video and join our family of traders by subscribing to keep ahead of the trends. We'd like to wish you a successful start into your trading odyssey and hope you'll apply this knowledge to realize consistent win after win. Thanks for watching, and see you next time.